You supposed to remind me, bro. It's crazy. Nice guy.
No, I wasn't gonna let you do it without it, bro. I ain't gonna lie to you. I already got it on my notes. Remind Ryan. I was not gonna let you start it without I got you, bro.
Appreciate you, man.
Already.
Check your Forex Factory, of course, for your news. Gotta check that on a daily. All right. Step two. Wait for step two, wait for higher time frame key zones. Um, where your key zones external, which is your, you know, higher highs. Lower low. Previous day. I just want to abbreviate. That's a lot. Previous day high. Previous day low. Then you have your internal, which is, and I'm gonna have this checklist. I'm gonna have a whole checklist and stuff for y'all too. So, but still take these notes and have it. Internal is your FEG or what about okay?
What's up?
What's going on? And then step three, we're gonna have let's see. on smaller time frame. So step 3, wait for liquidity sweep and higher time frame key zone on smaller time frame.
That one check. Forex Factory News. Step 2, wait for HTF.
Higher time frame.
What's
Higher,
PDL? What's that?
what is what?
What's
PDL?
PD? Yeah.
Previous day high, previous day low. And step 4. Hold on, check this out. I'm about to help y'all out right there. I'm about to help y'all out right. Y'all check what I said in the chat. Do y'all see it?
Let's see. Trade terms you must know. Oh, damn, I study this bad boy.
Yeah, it's just abbreviations, you know. Step 4, we got liquidity sweep. Inside higher time frame key zone on smaller time frame. Step 4, have clear, draw liquidity targets. Equal highs, equal lows. Internal liquidity, external liquidity. Step 5 is going to be waiting for smaller time frame. Let's see. One day time frame. 4 hour. 1 hour. Mhm. Okay. So we're gonna start off with something like that. I got that.
Yeah, I got it. Yeah, I got it.
All right. So we basically gonna do, we're gonna kind of go over and see what this looks like. Every step, right? That's how we're gonna do. Other than, everyone know how to, go to Forex Factory, do that. I'm gonna show you that after. But let's say higher time frame, right? Let's say, let's delete this. Let's say in this area, it's I don't know if, let's say this the 4 hour. On the 4 hour, we got like a uptrend, you know, boom, that one came in, double, and then, all right. Let's say this the 4 hour time frame, this section here. Move this over a little bit. Let me try to break this down as best as I can. Let's say right here is maybe 15 minutes. But let's explain this 4 hour. We got buy side, breaker structure, right? And then at the breaker structure, we had a bullish fair value gap was created. Right? It got respected. It came to break this other high here.
We say respected. What do you mean?
Respected. So what first you must know what is a bullish fair value gap? Whoever just asked that.
I asked that. Is when you say respect, is that because it hit? You mean resistance? Is that the same thing?
Oh, you're talking about like so respected as in it did what that gap was supposed to do. So that's why I'm asking. You must when I say it just it did what it was supposed to do. As in if it's a bullish fair value gap, do you know what bullish fair value gaps are made to do?
I mean, I guess bullets would say, I mean, go up.
To go up, correct. And then bearish is basically to send it down. So basically, and I just asked that to say like, so when I say respect it, as in since that's a bullish one, that bullish gap, the candles respected, as in the candles that came down, the bearish candles that came down respected the bullish area, which was this bullish fair value gap, to then go make higher highs. Because that's all bullish fair value gaps are, is to create higher highs.
I got you. I'm a
You
micro
with
runner.
me?
I ask like a million questions. Don't
Yeah,
mean
no, no,
I
that's
don't
fine.
get it, but
That's fine.
I like
That's how I
to
like to break it down, you
like to
know.
know everything inside and out. You know what I'm saying?
Mm-hmm. Yep. Yep. And then break a structure is just to let you know continuation. Because if nothing don't break past that high, we can see most likely selling. You feel what I'm saying? So I'm about to show y'all something. So right here, so boom, just hear me out. So you asked that question. That's a good question too, by the way, because boom, this bullish fair value gap was respect. These candles respected that bullish gap. Then that bullish gap created it broke through this high. It hit T, you know what I'm saying, buy side and broke through, closed for a runner, and it created a new high, right? So this new high is here. The new high is here, right? And then we came down to respect this bullish gap, but we failed to create a higher high here. We end up creating equal highs and also like a sweep, right? So when you fail to create equal highs, we know the last low, which is in this area, is going to be a change of character regardless, right? And this is on a 4-hour time frame. Change of character is basically a level where once you should get candle closes past, the market is most likely to reverse. Um, and that's the change of character level. Why? Because here, this is an uptrend. So to make an uptrend, we got to continue to make higher highs, which is these up here, and we got to continue to make higher lows. So to make a higher high, we got to have something breaking above this high, and we got to have uh, higher lows above this higher low. So if we making lower, you feel what I'm saying, lower lows, then that's the opposite. So it's going opposite, which is not supposed to happen. It's not to be direction of a bullish market. So when we see that on the 4-hour, we understanding that break a structure, break a structure. We did not get a break structure. We got a sweep. We didn't get a break structure. We got a failed to make a high. And this is most likely respected by a bearish gap that it made here. That it probably hit. And then it came down to this, made a double bottom, right? Made a double bottom. And this from a fair value gap over here, made a double bottom, shot back up, hit buy side TP. And then with that, we knowing like, okay, drawing liquidity, we got once we get this change of character, we broke back through. But this is what I want y'all to keep in mind. on this leg here. This is where we currently at. Let's say we're currently on this leg here. That leg created a bearish gap going down, right? Y'all see what time frame that's on? The 4-hour time frame. So this motherfucking area right here, 4-hour. He's on 4-hour key zone. So let's say here, let's say all we see is that bar up, and then we see that sell down, then we coming up to the key area. We got the you notice the 4-hour key zone.
What's the key zone?
Y'all with me?
I'm trying to figure out what's the key zone. That same thing as the value gap, or is that a different term? I haven't heard that term yet.
What you mean?
What identifies as a key zone? Is that just like another way of saying a 4-hour gap, or
Yeah, it's a 4-hour fair value gap. So up here. Um you see right here, step 2.
right? No, I was just going over terminology.
Mm-hmm.
Just making
So
sure because I see something
so
different than
yeah, you got it. So to just help, like so let's say 4-hour key zone, aka 4-hour fair value gap. If you got higher highs, it could be a 4-hour high, 4-hour low, or a 4-hour, whoever that, or it could just be just previous day low, previous day high, still a key zone. Because that's a daily key zone, previous day high. It's a daily key zone. You know what I'm saying? Um, and if you see a fair value gap on a 4-hour key zone, um, 1 hour, same for that. And also another tip, y'all. You cannot trade if you're not in a key zone. Y'all with me?
yeah, definitely with you. I hear you. I'm locked and loaded.
Mm-hmm. So now we're on a 15-minute time
Is it
frame.
too volatile to trade outside the key zone? Is just too volatile? Is it not in the volatility, or is it like a combination of both?
That's a good question. Guess what it is?
Mm,
You can't
uh
make a decision.
oh, okay.
So that's a good. I'm glad you asked that. That's great questions, but I ain't gonna lie. So because you're actually helping them other ones understand from different perceptions. So the reason why not to trade, of course, I don't. That's a. So the reason why not to trade in key zones is to
Hmm.
help your because our job here as traders is to get a hedge on the market, get an educational hedge on the market, correct? Now hear me out.
Correct. Correct.
Stay with me.
Okay.
If these fair value gaps is made to do something, you're going to get a 50-50 decision out of this outcome if you wait for these key zones. So because if you wait for the market to get to a bearish fair value gap, is it not two things that can only happen? It's either going to respect the bearish gap and do what? Make a lower low. Or it's going to disrespect it and do the opposite.
True.
You with me?
Yeah, only two directions, right? Up or
You
down.
you feel what I'm saying? You're narrowing it down to
Right.
where it's like only two decisions. Now you can wait to see what that decision is at this key zone. That's why. Please remember that. This
I
is
mean,
basically making it easy for yourself.
it takes like the guess luck out of it too. So you're not guessing now. You're going
You're
off of
not
actual
guessing. Bingo.
pattern.
Bingo. You're reading the market. Good question. That's good. Everybody else understand that too?
Yeah, I got it.
Yeah, that's a good question. Good question. And just everybody, if anyone else have questions, keep asking too. So we're on the 15-minute time frame, y'all. Let's say on the 50-minute time frame, we see how it came with its zone with a uh, see we can see all that's going on in this key zone. So first we
I like your drawing, by the way.
you said what?
I said I like your drawing, by the way.
Oh, appreciate it. Just trying to make it look, where it's kind of it helps out pretty good. So like that, we got that sell down. All right, down. Let's say we see this buy up into the key zone. You know what I'm saying? We see more candles on the 15-minute time frame. Let's say we get to the key zone. We make a high. Comes down here to then make that, and then keep here. Do that. Now, pay attention to what happened. Now, in the 15-minute time frame, you got to where, boom, you waited on the 15-minute until it came into the zone. Look, you got your buy side sweep. That's buy side, right? That's your buy side liquidity. It would have been a breaker structure, but the candle failed to close past that. So that's your buy side liquidity. And then remember, the last low that was created is going to be your what? Change of character. Change of character. This is on 15-minute. Now this is possible reverses, but at your change of character line, I guarantee you there's going to be a fair value gap made, y'all, for y'all to read what's going on. A bearish fair value gap on the 15. This is a 15-minute fair value gap now. That was created. Y'all with me?
Following along. Following along.
15-minute fair value gap that was created. Everything lining up for my sales. Now, in this, oh my goodness, this shit coming along good. Watch this. Break it down. 5-minute time frame. Right? You done seen it break a structure, change your character, and you done seen it respect that gap. But in this area right here, somewhere, or probably somewhere in this area after it respected that 15-minute gap. Now let's say We go draw this 15-minute area, which is right. We got the buy side, and we got the change of character, and we got it went up into the gap. We can see the more candle coming up into the gap. Over here. Now, right here, y'all with me.
Yeah.
But this is on a 5-minute time frame. All right. That's just a 15-minute FEG. Cool. We're gonna make that gray. We're gonna make the other time frame gaps gray. So yeah. And so check this out. Right here, their guarantee was a bullish gap made right here. That was a bullish gap made right there, right? It was a bullish gap probably made somewhere before it went tapped into the 15-minute fair value gap, or probably inside of it, right? Regardless, you got your bullish gap made. Guess what you're waiting on now? This motherfucker inverse right here.
So basically, for it to go back up,
No, wait. To go back up for what?
to go past for it to break that resistance, that
Well, which one?
the 15-minute. So 15-minute. I'm thinking we waiting for it to go past. It got to go back up and break past that 4 hour zone.
Okay, first I must ask, do you know what my bias was?
No. Well, we actually, yeah. This is shit. This is like a this is a bear, right? It's a bear.
Yes.
Just
So if
going
I'm looking,
down.
I'm looking for sales. I'm looking for sales. So
Looking for
I'm
sellers.
yeah.
You're right. So you waited for it to drop lower versus breaking the 15-minute fair value gap. I thought it was supposed to break the 15-minute fair gap and go back up.
No, no, keep them look to your left. Keep in mind, look at the 15-minute time frame. Look at the 4-hour time frame. This is what is the 4-hour key zone? What is that? What is that key zone? A bearish or a bullish key zone?
That's bullish. It's going down.
Look again. You said that's a bullish. Bullish means up. Bearish means down.
No, bear. I'm sorry, bear. It's going down.
That's a bearish key zone, correct?
Yeah, it's going down. Going down
And then
to
on a
make it.
15-minute time frame, what is it doing? It's entering the 4-hour key zone, correct?
Yeah, it's going into a bull. It's going up. I went up to
N-
make it, then I went back down to respect it.
No, it never it entered the key zone is what it did.
Okay.
It went up to go inside the key zone. You remember on your steps right here? Step 2, wait for a higher time frame key zone. Higher time frame key zone we waited for. This is step 2,
Step
right?
two.
We
So now
waited
what?
for a higher time frame key zone.
So now I went for step three then.
Step 3, wait for liquidity sweep inside higher time frame key zone on a smaller time frame. Regardless, we got our buy side liquidity sweep on the 15. You can still count that. We got the buy side sweep inside the key zone.
So you got that. So
Now, wait, now make sure you have clear targets. one of these targets equal highs, equal lows, internal low, and external lows or highs. Got my sell side targets clear. Clear.
Oh, okay, okay, I see. You wanted to drop past the targets. Go, let me
Yeah,
actually
this
go.
is a 4 hour bearish.
Mm,
Yeah, it's a 4 hour bearish key zone. You would want to buy when it's that high. You feel what I'm saying? I mean, if regardless, I'm waiting for these candles to close at these key zones to know if it's respecting it or not. You just got to learn how to align. These are time frame alignments right here. So we got our clear targets. We're in the 4 hour key zone. We made the buy side change of character, and we made a 15-minute bearish fair value gap. You with me?
yeah, yeah.
So when I go to the 5-minute time frame, this is inside the 15-minute fair value gap. You
So
with me?
so basically, the microcosm is supposed to be the same as the macro. You want it to go to basically repeat the same pattern. You're looking for the lows. The sellers will go down at a certain level.
Huh?
You want it to repeat the same pattern because you set it.
Yeah, it's time frame alignment.
Got you.
Time frame alignment. So it's not more so repeating the same. These patterns is showing you that it's respect. You knowing which way of the market, like fair value gaps is made to tell you you're in a bearish market, you're in a bullish market, literally. And if those get respected, those is telling you it's possibly about to do the opposite. You with me on that?
Yeah.
So you see, if we're looking for sales, expecting sales, just hear me out. If we're expecting sales from these key zones, we got the 15-minute, you see, we respected, and then we got a bullish gap. This bullish gap was supposed to do what? This you see that green bullish fair value gap that was made?
Yeah.
It was that was made there to do what?
So go to be broken again.
Don't overthink. What is bullish fair value gaps made to do? Don't overthink it. That's what I'm saying. You're overthinking it a lot, but what is bullish fair value gaps made to do?
Bull means to go back up.
Okay, so what was that bullish gap made to do?
To just let you know when it goes back up.
Not to let you know, it's made to shoot the candles back up to a higher high.
Okay. Got you.
What are bearish ones made to do?
Made to go down. It's the opposite. It's made to go down.
It's meant to shoot the candles down.
Right.
You got that?
Yeah.
So now that you got that logic, now you can go off of what happens if a bullish fair value gap gets disrespected. Disrespected as in it gets rated, it gets ran through. It
It's the, op-
doesn't it
it's the,
doesn't shoot the market up.
it's the opposite.
The opposite.
Right.
Now you with me? That is called an inverse.
Right. No, I got you. I got you.
So, which leads us to step 6. Wait for your inverse entry on the 5 or 3 minute time frame. Since we're looking for sales, we're waiting for a bullish fair value gap to get inverse for our entry. Again, that was a good question. I'm just lining it up so it all just makes sense. And then look, and that's the same as this. Y'all with me?
So you take your position at the 5 minute.
On the 5 minute candle inverse. On the 5 minute inverse, look, step. Wait for 5 minute inverse for your entry. As soon as the candle close past that bullish gap, enter. Place your stop. Anywhere you'll be protected by a fair value gap, a bullish fair value gap that turns into a bearish one because it got inverse. You're protected by that now. Or you can put your SL up a little bit more and just target your lows. TP1.
And how exactly does a stop margin work? Is it protected from a certain amount of loss? Is it like 10%, 20%? How does that work?
Well, as in
Stop
you're talking
profit
about just
margin.
like your
Yeah, I just want a better explanation. I know it stops you from, like you said, your profit loss margin. It stops you from losing profit. But is
yeah,
it like
that's all it is.
is a
Wait,
certain
as in
amount,
like
or it just
you what?
stops it? Does it stop you? Let's say if you're going for a CP2 and you're going up, you see that you're losing. So it just stops
Losing.
at a certain level.
If you at TP1, you're making money.
Yes. Yeah. So what I'm trying to say is at what level? So explain to me better the function of a stop margin. Give me a better explanation because I know a little bit, but I don't know enough.
I always say, are you like you're brand new to trading?
Yeah.
Okay. So more so stop loss is where if it hits this level, so check this out. Let's say your stop loss is at the top of that red, would be at the top of that red box, right? The red box that I put. That's just where if it
Yes,
hits
I see
that
it.
level, that's where you're putting to where if it hits that level, it's taking your loss for you. You're not just still in the trade hoping it for the reverse
Well,
because
no,
taking it at sell is very important.
well, I understand that, but it's a certain level. That's what I'm trying to figure out, like very specific. Like I understand it stops the loss, but does it work like a certain level you set it to, like maybe to stop faster or sooner, or does it have to go at that level where you put, or is it pretty much anywhere you put it at?
It's not anywhere you put it at. You remember you see that gap, you see the fair value gaps, you use it at for protection.
Yeah, yeah,
Because
yeah.
again, what is this bullish gap? What happened to this bullish gap? It became a bearish one, correct?
Yes.
So that can become our what? Protection point.
So once it goes past that point, we good because at that
You're
point,
expecting the market not to be that area to be respected because it inversed it and created a resistant point.
Mhm.
So you're using that for bulletproof. You with me?
Yeah, I'm with you. New concepts.
No, yeah, that's good. Yeah, so now you can. So that's what I'm saying. So now you can choose. Hey, do I want to risk? I can put it here, and I'm protected by that inverse fair value gap, right? Or I can put it here, protected by the 15-minute fair value gap. You feel what I'm saying? And then you can you target your lows or whatever. However you want to play it. That would be a personal perception, but you can go in if you know what I'm saying, you thinking that it's good volume going on, you can go risk like that. You feel me?
Yeah, yeah. Just learning.
Or or look, or you can go that high right there. This high right here that was made. Because regardless, this is a protected high after it did change a character on a 5 minute. You know what I'm saying? After it closed here, that change of character, this became a protected high. So you can,
Why is it a protected high? What does that mean?
because after just a high that's more because it's a protected high. Look what you're protected by. What is that high protected by?
I don't know. So I'm asking.
Oh no, that's good. Remember what we just said? What we just went over?
The
The
fair
inverse, the fair value gap.
the fair value gap. Yeah, I see that right there.
Yeah.
Okay. Okay.
You're
So
you're
basically the gap is protecting it because the fact that that's where it's gonna go up and go down, and you can just basically predict that is, most likely gonna hit right there. The
because of
trend is
what?
gonna change because the trend is gonna change right there.
But you want to know why though.
Right.
And we went over, do you know why?
Because it actually went through. I mean, it's the trends. The bottom changed, went up to top and changed.
The bullish fair value gap got what?
It got changed.
It
Switched
got
over.
disrespected. So it's a bearish.
So at that point,
A bearish gap is made to shoot the market down.
right.
So that's all. That's what we're putting our money on. Because this now aligns with what? The 4-hour time frame for the sales. And we can expect the 4-hour time frame to just go here and sell down to this low. We're expecting this all because our whole alignment is saying, hey, I'm expecting this 4-hour fair value gap to make a lower low. We're just waiting for the key zone, and we're just going down to the smaller time frame to just confirm that we could be respecting this key zone. And then we're entering once we get alignment on a smaller time frame and putting our money on that.
Gotcha.
Now, do anyone else have any other questions on the higher time frame? And then also I'm gonna have a better checklist as well. And good questions too. And so you got the TP, boom, boom. Got your alignment there. So let's say we go to NQ. I go to my daily. I go to my daily. I instantly can mark this this bullish gap. This bullish gap was supposed to, if it was respected, it was supposed to do this and go up to these highs. Did the market do that? Yes or no?
No.
No, right? So you got an inverse on the daily. Since you got an inverse on the daily, we most likely can expect this low to be hit. External. Right? And we also got a low here. Possible sales, easy. Because we got a daily time frame inverse. I go down to the 4-hour. I know this gap is my daily. This is my daily. FEG. And I understand it's inverse on daily. I go down to the 4-hour and I see we're below structure. And I also see we have inverse this bullish gap on the 4-hour. This is on the 4-hour. Do y'all see how this gap was really made to then at least push it up to there? That didn't do it. It closed below it. And now that's an inverse on a 4-hour. You see how bearish I am and how I would not be bullish at all? Never be bullish. Sell side here on a 4-hour time frame.
You said
I'm
never
gonna
be
go.
bullish.
You said what?
You said never be bullish.
Do you see why?
I see that it definitely just dropped and it followed the same pattern. I mean, I can see the pattern recognition.
Do you see the fair value gaps though? I don't think you're understanding it. But it's all in the fair value gaps that's telling you the story is what I'm saying.
No, yeah, I see it. Yeah, I was just trying to figure out why you said that. I can see that it lines up. They basically it's relining back to the same thing. Like it's
You don't
going
want to
back.
look at not more so the same thing, but it's just disrespecting these fair value gaps. That's what I want you to really focus on. More so because if you try to focus on that, you're gonna confuse the whole concept.
Gotcha.
And I just don't want you confused. That's it. But you got the right. You're right, but I just don't. When you look at it, I want you to look at it like, because we're disrespecting these bullish gaps that's supposed to push up. I'm bearish. And then when I go down to the 15, that's why I called them sales. I called these sales here. Friday we caught the sales down in here. But let's say we know we bearish, we haven't had this sell side has not been hit yet. We know this is drawing liquidity. The market has to take out this bit of sell side. So the best way to get the entry down to sell side, what you want to do is, and when you don't see structure or fair value gaps to the left, like on the recent legs to the left, that means you just can't, there's nothing to trade. Like on a 5, there's nothing on a 5 I would be able to do. On a 3, there's 3-minute gap. Look, that would have been a 3-minute inverse right there for like a entry probably going down when that kind of closed, came back up. Dang. And like that's how you get like trades. Like you just get a direction on a bigger time frame and you can catch the small move. That makes sense. From a 3-minute inverse or something like that. Down to, because on a higher time frame is trying to come to this sell side here. That's drawing liquidity on a higher time frame. So we set everything up, went through all of our steps. Broke it down. Pretty good, huh? Everybody?
Yes, sir. Good breakdown.
Yes, sir.
And y'all gotta remember, y'all are aligning that. Y'all gotta remember your high time frame bias and what y'all looking for to align at the key zone. So you can only trade at key zones. If you're not trading at key zones, you're like, oh man.
So if it is in the key zones, I mean, if it's not, well, if it's not in the key zones, I mean, like the market is like chopping.
Think about it. If it's not at a key zone, if it's in a key zone, that's where the market usually chops or so because it's about to make a decision. It's at a key zone, stronger, tougher key zone. When it's not at a key zone, think about it. If you done hit a bearish FEG and you done sold down, you have already done missed the move. So it's already selling. You gotta literally wait for at least if it's a 4-hour bearish gap, you would want to wait to catch a discount move from probably a 15-minute created bearish gap or a 30-minute bearish gap that was created on the way down. And then catch that re-entry for the continuation on the sell.
Okay.
You just gotta make sure it's a higher time frame key zone. If you miss that 4-hour key zone sell,
Go down to the hour, 30 minutes. If you see a bearish fair value gap on the 30 or the 15 on that leg down.
Okay.
Wait for the market to come back up to retest to then do the same thing. You feel me?
Yes, sir. Appreciate it.
Yep. So that's all you do with that. You just keeping everything simple. Keeping everything simple. All right, so